Let's get set. All right. Hi, everyone. This is Gilberto from Maverick Media Lab, and I'm here with Richard Schaefer, and he is a field partner of United Financial Wealth. He's a co-founder and national sales director of Choice Mortgage Group, and he's been in the industry for 30 years. He was actually a financial planner as well and has 13 licenses, spoken all over the nation about what we're going to be covering today, which is how to get CPA, financial advisor, and attorney referral partnerships. And what better person to bring on than someone who was a financial planner himself, been in the insurance space as well, and was also for many years in the mortgage industry as well, and is currently right now a national sales director for a pretty big company in the mortgage space. So Richard, welcome on once again. I really appreciate you you joining on the show today.
I appreciate it very much. I appreciate the invite back. That's always a special privilege. So thank you for that.
Yeah, and just to kind of give anyone who hasn't seen that first one there, where Richard had joined on with us, when I brought him in, we were kind of in the stage where we were in September, so exactly 1 year ago from this month. And it was before like the whole rate change and everything was good, like refis were up. And at that point, Richard and I hopped on and we talked about how things were going to shift. And Richard pretty much spot on had nailed down what was going to happen. And more importantly, what was going to happen to those loan officers that didn't really start focusing on those relationships, right? Both with their clients, but then also with realtors and other types of industry professionals. Yeah. So like, Richard, can you kind of, for those that didn't see, kind of introduce yourself, a bit of your background as well that I haven't mentioned, and then kind of just do a recap on like what you had covered last time.
Yeah, I really appreciate it, Roberto. And, it's interesting because when we talked about this and you and I were kind of marveling at the fact that it literally was a year, right? And I don't know that it was prognosticative, but, if you've been in the industry this long, you start to understand the mechanics of this industry a lot, and not just, the visible part, the retail part of it that we all see, but you understand the back end of it, in our business, the mortgage-backed security end of it, how these mechanisms work, and the retail side, the wholesale side of things. And there were some really telltale signs of what we were going to be seeing. And so I'm not proud to take credit for it because it's a shame that I was right. But, we said that rates were going to easily double and be into the sixes by the middle part of the year. And, there's a lot of things happening there. But the reason that we brought that out wasn't just because, I'm making any money by telling people what's going to happen in the industry, right? That doesn't benefit me at all. But what we did try to illustrate, and you were really great at creating the opportunity to talk about this, was that we are first and foremost in the people business. Having been in the insurance industry, the securities industry, the mortgage industry, the real estate industry, financial software, on the fintech side, and even in the crypto space, there's one thing they all have in common. We're still in the people business. And I think sometimes one of the biggest challenges that people face in our industry, and the reason they have such a difficult time forging really strong referral partnerships, as you work so hard to help them cultivate client relationships, is because I know it sounds touchy-feely, but you got to treat people the way you'd want to be treated, right? You have to engage with them at a level that they're able to relate to. And I think we've become so sterile in our business. I hate to say it for any doctors that might be listening, but it's like developing a poor bedside manner. You might be brilliant and understand your craft, but the person you're dealing with thinks you're an idiot, right? They think you're a pretty cold-hearted person. And our business does, unfortunately, create that same dynamic sometimes. So one of the things we talked about a lot, I think we're gonna build on that today, is that if you are not separating yourself, you are going to be doomed for extinction. Now, one of the reasons we talked about what was going to happen last year, again, wasn't to just create this gloom and doom sort of scenario, but it was illustrating that when things are good, Gilberto, it was like manna from heaven. Business was coming anywhere, and guess what? People get sloppy, right? They don't cultivate great relationships with their client because they think they're going to have 10 new ones next month. They don't do a great job strengthening their referral partnerships and things of that nature. So one of the reasons we talked about last time was that if you don't start positioning yourself, it's like the musical chairs analogy. You do not wait till the music stops to start looking for a chair. You better start keeping your eye on where you're going to sit before the music stops. And that's exactly what's transpired. So we can't change the past. Here we are in September of 2022. But now the question is, regardless of what you did or not do up to this point, you better start focusing on ways you can actually cultivate long-term meaningful and reciprocal referral partnership relationships. Now, of course, in our industry, the obvious go-to is real estate partners. Now, it goes without saying that they're a great resource. There are obviously some phenomenal real estate agents around the country, but you have to recognize that if there are just now over 3 million licensed real estate agents for the first time in our industry, and right now our 12-month rolling average of business that was closed is 4.8 million. Do the math there. That's about 1.6, 1.7 transactions per person. So we know that only about 8% of agents are doing more than one sale a quarter. Now you have to start thinking about, now there's some that do, 10, 20 deals a month. They're superstars. But the truth of the matter is there's a small swath of really, really good, qualified, experienced, and successful agents. That doesn't mean that you don't want to cultivate relationships with new agents. That might be the next superstar in 3 years. But the point is that, forgive this expression, and for the ladies listening to this today, it is a little bit of the pretty girl syndrome, in the sense that, guess what? If you're the pretty girl, everybody wants to ask you out. And that's what ends up happening a lot in our industry. Here's the problem with that. When you've got 20 loan officers chasing that one agent, you're going to have a really hard time catching them. It's also really hard to keep loyalty because every agent says the same thing. And I really wish they'd stop saying this. Let's be your backup. Hey, if that doesn't work out, call us. Now that's effectively honest, right? And if you do a good job at follow-up, then maybe that's fair. But I don't go around trying to date people saying, hey, if it doesn't work out, give me a call. I mean, that would be a complete turnoff. And our business is the same. Realtors pride themselves on being loyal to clients, developing loyalty. So yes, I think there's a great space, Gilberto, for great realtors. And, your company has done a phenomenal job with that. I think that's why you've been so successful in this space, even in this kind of market. Because when refinances drop down 70, 80, 90%, which is exactly what we predicted would happen last year, then purchases become king. Well, guess who does purchases? Real estate agents, right? So I won't even spend any time really talking about that subject, because you've got 20 other loan officers that will tell you the 27 things that they do to be effective with real estate agents. But coming from the financial perspective, having been a planner and advisor for many years, you want to cultivate really good, solid FinPro relationships outside of the real estate agent window. Financial planners, advisors, CPAs, accountants, and yes, attorneys, specifically divorce attorneys, or those that do wills and trust, because they know the need that a client is going to have before they have it. So those are, we can get granular in whatever direction you want to do, but that's really the 30,000-foot view. There's got to be a shift in terms of how you start focusing your energy on developing other really good, solid, qualified referral partnership relationships.
I love that. Yeah, we've been seeing that a lot, even with current clients too, when we do the realtor outreach for them. I agree 100%. Like what's working now, especially like with how the market shifted, having a very unique and different approach, and then also a unique and different value proposition, because everyone's kind of saying the same thing, like,
right.
I'm available on weekends, rates, programs, like all that kind of stuff. It really doesn't grab the realtor's attention, but having something different on, a different approach and value proposition, it really helps a lot for the realtor stuff. And now, when it's getting even a little bit more harder to get the real estate agents, it's time to also look at other kind of avenues, like not just CPAs, but then also financial advisors and divorce attorneys. And that's something that current clients have brought up to us, and we've been hearing that a lot for people that reach out to us. So one of the things that I hear very commonly on calls when we have someone, a loan officer that reaches out to us, is like, okay, why would, if we kind of present the idea of CPAs and financial advisors, their next question that's very common is like, so I just, I don't know what I can offer to a CPA or financial advisor. So being a financial advisor yourself, what can you tell the loan officers about what their value is that they bring to the table to someone like a CPA, a financial advisor, and an attorney?
Well, if I have your permission to be, pretty frank, I'll tell you one of the challenges, okay? And I mean this out of tremendous respect, because there are some phenomenal people in our industry. But sometimes you got to just take off the kid gloves and call it what it is. One of the great challenges that I think we face industry-wide, and this is both individuals in the real estate and certainly for this conversation, loan officers, they're not necessarily often highly respected by other quote unquote financial professionals. And by that, I mean financial planners, advisors, certainly CPAs, accountants, and lawyers, because Number one, often the educational requirements that come lock in step with certainly being a lawyer, but even being an accountant and others is a much higher threshold than what it might be to be in mortgage and real estate, right? I mean, literally, you graduate high school, you could become a real estate agent or loan officer. Nothing wrong with that. There's some people that have done incredible things in our industry. But if we're being frank, you have to remember, what is the psychological perception of the other FinPro, right? I think that's why some people in our industry are intimidated to go to them, because they feel that imbalance, okay? But here's one of the things we talked about a lot. Here's the great thing about mortgage and real estate. There's a big commission associated in most cases when you close. But because you only get paid once, it becomes a sale, it's a transaction, it's an event, and it's over. Now, what's the problem with that? The problem with that is that it doesn't force you to cultivate long-term, intimate client relationships. On the other hand, if you're a financial planner or an advisor, an insurance agent, you're a CPA and accountant, you're only getting little bits of money throughout the process, but hopefully over long periods of time. Now, what that means is it actually affects the way in which that professional interacts with their client, because that's why they're more clients, not customers. Of course, I even hate that expression, but clients are concerned about education, service, and value. It's an ongoing relationship. Remember last time, we talked a lot about becoming a trusted advisor, not a transactional agent, not a transactional loan officer. And that's how so many clients feel, right? And technology has made it easier for them to do certain things on themselves, which mean their perceived value associated with what we do is diminished. So you need to level that playing field by being a lot more intimately involved. So here's a perfect example. Let's take a CPA or accountant. I've done an entire video series on these very subjects, but if you ever notice, Gilberto, if you deal with an accountant or a lawyer, what does their business card look like? White card, black lettering. Now, you could say that's not sexy, but there's a reason they do that, because they're not salespeople. So therefore, they typically don't like salespeople, right? They like people, they view themselves as a qualified, licensed, registered professional, and they have resistance to the sales process. Well, but so do we, right? None of us, everybody wants to own, but nobody wants to be sold. So one of the things that we talk a lot about is they're focused more on who they are and the job they do or the career they're in, as opposed to all the splashiness. And I'm not saying that's right or wrong. I know most agents put their pictures on their cards. I understand the importance of branding and all those sorts of things. So it's a necessary evil. I'm not saying that it isn't, but that doesn't change the fact that the perception is going to be that way. Also, I hate to say, but a little bit of a dirty secret. There are some really successful accountants and CPAs, certainly, but as a general rule, they're moderately paid. But there are many individuals in the mortgage and real estate industry that make a lot more money. Now, that's great for us. Problem is, that's probably not going to rub that particular other professional very well, because their perception is, I'm a much more qualified, experienced, educated professional, but these other salespeople make all this money. Now, again, we could talk about whether that's right or wrong, but that's irrelevant. So here's the most important thing to an accountant, to a CPA, and certainly a financial advisor or a planner. You better take absolutely golden care of that client, because those professionals have an ongoing relationship. If you're a real estate agent, Gilberto, and I deal with your client and it doesn't go great, but the deal closes, you still got paid. If I screw up that relationship at any point in the process with that financial planner, and they're dependent upon that client continuing to pay their insurance premiums every month or continuing to invest money for college and retirement, and anything fractures that relationship, you might have wiped out that entire future ongoing relationship and revenue stream for that financial planner. That is a big deal. So that means you better earn the right to be viewed as a genuinely professional, trusted advisor. Communication better be spot on. The way that you engage better be ongoing and dynamic. And this is why it's so ironic, because this is the stuff we talked about last time, even independent of these other FinPro partners. It was, how do you become? Where does it start? It always starts with us, right? The solution is always within us. So if they don't start developing those better relationships, you're going to pay a big price. Now, when you're dealing with people on the insurance side of things, again, as I alluded to a minute ago, that's generally a very long-term relationship. Now, if they're a P&C guy, homeowners and auto insurance, et cetera, it's a little bit different universe because they're not really financial planners. You have to have the insurance by law, all this kind of stuff. But when you're dealing with a financial planner, an insurance agent that might do annuities, maybe they do college retirement, things of that nature. Remember, as I said, they're only getting a little bit of that money up front, and they're counting on the rest of it to build that strong book of business over the next 5, 10, 20 years. So they have a very, very strong trusted advisor relationship. And we've got to think a lot more that way. I just can't stress it enough. You have to stop being a transactional agent and start becoming much more of a long-term, genuinely trusted advisor. One of the ways that you can help to forge those relationships, because they're probably not the kind of person in most cases you're just going to cold call. You could theoretically cold call a realtor because they have to cold call people too. It may not be the most pleasant exchange, but if you're dynamic enough, you can probably make that work. Most financial planners, advisors, CPAs, and accountants, that's probably not going to fly. Number one, they're probably not even going to take your call if they don't know you and it's a solicited call, right? Realtors are going to take the call because any call could be a hot call, right? Any call could be a prospect or a referral. That's generally not what happens in the universe of a CPA or an accountant. Does that make sense? So you're going to get the same thing in the financial world. Insurance guys are more sales orientated, but it's really important. So you got to start plugging yourself into organizations and groups that actually foster those kind of relationships with those qualified financial professionals.
Okay. And what do you feel is kind of like the biggest, I guess, value proposition for, like, for example, a CPA, a financial advisor, a divorce attorney? Like, what's kind of like, once you do like get in touch with them, like what's the thing that you can use as kind of like the foot in the door to like bring value to the table? I know a big proponent of like something that we've talked in our conversations is like give to get, right? So what's kind of like the value that the mortgage broker is bringing to the table for these financial professionals?
Absolutely. And I'm glad you said it that way. I know it sounds cagey or whatever, but you have to give to get, right? Now in the mortgage world, we think, yeah, I'm giving and getting with the real estate agent because I'm helping the transaction complete. That's probably not what is happening with a CPA or an accountant, because they're doing their taxes regardless of whether you're doing their loan or not, right? Financial planner might be the same. That's a little bit different. We'll talk about that in a second. But as it relates to CPAs and accountants, the only thing that's really going to matter to them is, can you provide a value added benefit or service to their client that not only will not make them look bad, because they're a lot more concerned about looking bad than they probably even are looking good. You better provide real, genuine value. So that way it helps to strengthen their relationship as somebody that's even more of a trusted advisor. As an example, if I'm an accountant or a CPA and I say, well, Gilberto is the best I know in the business in real estate, or, Rich in mortgages, or whatever it may be, we better damn well deliver. And then if we do, that strengthens their personal credit, so to speak, right? Because now they're even a more genuinely trusted and valuable advisor to that client. So because there's not a direct remuneration advantage, right, like there would be in a real estate transaction where we're helping them to facilitate the financing, it's very different. There's only one thing that's really going to help them, is exactly that. Now, expanded beyond that, if you are a really good, qualified, experienced, well-connected loan officer or a real estate agent, et cetera, you know a lot of people. Shouldn't you also be reciprocating, even if there's no advantage for you, and saying, listen, John Smith is the best I know in the business when it comes to, CPA, tax work, being an accountant. He's really somebody, because the average person doesn't really necessarily have their own accountant in many cases, or their own lawyer. So that's really, really important. So I think that's one of the most important things there. On the insurance side, or the financial planning and advising side, that's a very different conversation, because there could be a very immediate benefit to that FinPro. For instance, I'm not carte blanche an advocate for this strategy. There's something called equity harvesting. And the great advantage most people do have right now, rates are higher, inflation is high, there's a lot of pressures out there, and even more than we probably have time to talk about. But equity is the absolute greatest advantage most people have. The problem is most people aren't going to be looking to refinance their 2, 3, 4% rate with something that's 5, 6, or 7. That's just a fundamental common sense rule. But there are ways in which people may want to be harvesting some of that equity, and from a proper strategic financial planning methodology, they might be able to deploy those dollars for other things. So that could be a very reciprocal kind of relationship there. But you start talking in that manner, Gilberto, you start saying, listen, there might be some ways that we could explore some really creative financing ways to help your clients be better advantaged, more adequately protected, better prepared for college, retirement, et cetera. On the divorce attorney standpoint, that one's probably a little bit more obvious. Unfortunately, I hate to say it, I guess it's like feeling like an ambulance chaser in the world of people that are in personal injury. When it comes to divorce, they're going to be getting divorced. I talked to a divorce attorney today that I'm developing a referral partnership with that did some work for me years ago, who just got divorced himself. And we were, I hate to say, he said, well, at least you could represent yourself. But we just talked about this. He said, you know what, Rich, I do have somebody, they're going to be getting divorced and they've got to refinance. Now, bear in mind, there's a great example in the old movie Red October. And he says, how do you get people to want to get off a nuclear submarine? And that's, of course, when he figured out faking a nuclear accident. The same thing happens here. How do you get people to want to refinance when they might have a 3% loan and it's 6%? That makes no sense, because they have to, because they're getting divorced and they've got to get that out of their name. So that is going to be one of the most bulletproof scenarios you have there. Again, though, lawyers are not salespeople. If you start cold calling lawyers, you're going to get shut down and you probably won't even get to the lawyer. And then you'll really be polarized. So there's some great ways in which you can begin trying to set up appointments. I'd say what people got away from doing, because we can do this right here. I meet at least one person a day for coffee, breakfast, lunch, dinner, or drinks. Not all in the same day, by the way, but at least one of those things with somebody in the community. Maybe they're not even a direct contact with me. They're a successful person in business in the community because they know people, right? Builders, that's a whole nother conversation, right? They have people that have to buy a house and they're going to be probably a lot more loyal to you than quite frankly, I hate to say, a lot of realtors might, because they're not getting solicited as much. But divorce attorneys really are a great resource, but you've got to start putting in the legwork, right? Again, you got to give to get. It's got to be authentic. It's got to be genuine. It's got to be client centric. It can't be solicitory, and you'll get some really favorable responses in a situation like that.
Yeah, I like what you said, not just like the practical stuff, like the equity harvesting stuff. Like that was something I wasn't aware of, which is, I'm sure probably a lot of people that are seeing this, you know, would love to hear more about that. And I think it's also like a mindset shift on understanding the psychology of like the other person, because they are different than like the real estate agents, right? Where it might be, you know, there are definitely some that are more relational, but like for the most part, like as you mentioned, like transactional, more transactional as compared to like someone like a CPA
More
or a
cerebral.
advisor. Exactly. Yeah, a lot more logical, kind of right brain. And they're thinking of things like, you know, more, you know, down the line, like years and years, right? And so they approach things
like we should be, actually, like we should be actually though, right?
Exactly. Yeah. And so that's a huge point that I just wanted to like emphasize, that a lot of people probably aren't aware of when they do approach the CPA. Like, how are they thinking from their perspective? How do they view the mortgage industry? Because if they know that, if they're aware of that, then they know how to custom tailor their approach so they don't sound like every other mortgage broker. Because there are mortgage brokers and loan officers that reach out to these individuals, but it might not be in a way that kind of resonates with them. And if it doesn't resonate, you know, it's not going to be very successful.
You said it right there. And it really comes down to that. And even with the limited time we have, I would recap that statement by saying, you know, there's an old expression that says you can't judge a fish based on how well it can climb a tree. Okay. And at the end of the day, you can't expect, you know, you're traveling all over, right? You've been to Brazil and Colombia and so forth. If you try to speak Spanish to people who speak Portuguese or vice versa, they're not going to appreciate it very much. Okay. So you got to really make sure that you're prepared to try to speak the language respectfully of the people that you're dealing with, right? Or at least put forth an effort, right? Like my Spanish isn't great, but if I put forth an effort, the locals typically appreciate it when I'm traveling. The exact same thing happens, right? And I hate to say this, I know it sounds so generic, but you got to stop being the things you did in the past that were fine when it was manna from heaven aren't working now. And we've got to revise our thinking. Now, this is the way I've always ran my business, but we get away with not doing everything we should have to do. And, you know, one of the problems is the things that it takes to do, they're both are easy to do. The problem is they're easy not to do.
Yeah.
Those little things, those little follow-up, those real personalized touches. And I think it really begins with recognizing that you've got to transform yourself into a long-term trusted advisor, because, you know, nobody wants to follow, but everybody does want to be led, right? Just like with our clients, right? They don't want to be sold, but they do want to own. And we've got to start getting back to a lot more of that grassroots. I think technology is amazing. You and I have had this conversation a million times. Social media is a curse and a blessing. The internet's a curse and a blessing. I might have 11,000 people on my phone and 50,000 followers here and there, but how many do I really know? So people don't want to feel like a number. You don't, I don't, our clients don't, our referral partners don't. You better start personalizing your business, and you got to start putting in the work. It's not agonizing work. And quite frankly, it's really fulfilling. It's really gratifying to know your clients, to actually deliver for them, to have great, strong referral partnerships. Would you rather solicit and have to start over every day, or actually start building long-term trusted relationships? It's certainly a much better way to be in business in this industry.
Is there certain things too, because you mentioned about like the follow-up and doing those touches too, like is there certain things that you're doing as well that you found to work best with like financial advisors and CPAs, just not only for like the meeting, like once you do, go in there, you approach them and you do have
Sure.
a sit down with them, but also like on the follow-up too, things that have worked for you in the past as well for any of
Absolutely.
those.
One of the things that I did a lot, and COVID, we got away from it, for some obvious reasons, just because of restrictions, but I would always do regular client appreciation events, right? Where I'm celebrating the clients I have, and I'm rewarding and or acknowledging those that have been loyal and given us a lot of referrals. One of my clients has given me 27 referrals, not a referral partner, a client, right? Now I've been in the business quite a long time, but I would invite every one of my qualified financial professional referral partners to those events. And people would recognize that we're a group, like we're a success group there to serve them. This is our accountant. This is our financial planner, right? This is our advisor. This is the gentleman that's a real estate attorney that does wills and trusts or does whatever the case may be. Now all of a sudden, we're not individual. I'm not Richard Schaefer. You're not, Gilberto. We're actually part of a group that is there to help service them whichever direction they need. Buying a house, financing, insurance. You really want to separate yourself in a way where you become this trusted representation with your clients. So we would do that a lot. The other thing we would do a lot is a lot of co-branding. We would do a lot of events and or a lot of things that would be, joint efforts, so to speak, right? And really involve those people. They're not competitors of yours, right? I'm not going to go get a law degree anytime tomorrow. I'm not planning on becoming a CPA. Why would we not celebrate those relationships? And let me tell you a crazy thing that happens. Your clients actually begin to cross-pollinate for you, because in your zeal to help provide this value-added benefit, which by the way, I don't make any money if that agent does work or if that CPA services them, but it comes back to you tenfold if you actually, because now your clients are referring other people and then they are referring them back to you. You create your own glorified BNI, if you will, but within your client base and your referral partnerships. It is one of the reasons that, hey, when it gets to be too much of this, too much paper, it's an annoying business. Too many emails, too many calls, it becomes sterile. Listen, we've lost a lot of humanity in the last 3 years because of COVID and everything else. People are desperate, Gilberto, for contact, real, legitimate, deep, engaging relationships. And it starts with us. And if you actually put forth the effort to do that and work on your business and on those relationships and you prioritize them, everything else becomes very, very easy quickly.
One thing that I wanted to ask you as well, like, you're a national sales director, you got a lot of LOs that you're managing and and that you're helping as well with business development, all of that. What's the biggest thing that you see that is holding like loan officers from just in general, like building these relationships, not just for the clients, right? Like doing those follow-up, doing those touches, doing the events, but also for like the referral partners. Like, is there anything else apart from like what you had mentioned throughout the call? Like, is there other things too that you kind of seen as a pattern that might be stopping them from, growing those partnerships?
Yeah,
And those,
there's a number of things that I think that's really powerful you brought that up. We're in an incredible growth mode right now. I know that sounds crazy to most people on this call right now, but I got to tell you, when a lot of people in the industry were doing so well, not really doing a lot, and even with groups and teams and managers and so forth, that they didn't really like very much, but they were making so much money that they didn't really care. Now you're finding people like, look what's happening. You get one bulletin after another, companies cutting back, big banks cutting back. You're going to see the growth of non-institutional lenders here very soon because they're cutting back, they're scaling back. You see people, laying people off like crazy. That's an opportunity for us because I'll give you a great credo that we have. One of my partners says this very often. We're the biggest little company you've ever done business with because we have a lot of infrastructure, but we're mobile and we're fluid. We do a lot of things as a group. We have a very big team environment. But this is one of the things I celebrate. We've lost this. People want to be in business for themselves, but not by themselves. And so one of the things that we create in that kind of environment is coaching, mentoring, support, and accountability. You know, it's an amazing thing. I don't know if you've done a lot of stuff with sports. I think you're a pretty athletic guy. I'm sure you have. The greatest people in the world don't have bosses, they have coaches. I don't care. We've used all the examples, Tiger Woods, Michael Jordan, you name it. They've had coaches, right? People want to be coached. They want to improve, but you've got to create an environment of excellence where people want to perform. They want to excel, right? And I don't mean in the hardcore, crude, you're good or you're gone kind of mentality, although there is a part of me that kind of feels that way sometimes. The truth is, I want people to willingly be accountable. You know, so we have regular accountable. We'll do calls. We'll get everybody on a Zoom. Everybody mutes out, and we're actually following up with FinPro partners. We make it a regular part. Consistency is everything. One of the greatest challenges we have in life with weight loss, one of the greatest challenges we have with finances is people are not consistent. We're humans. Life happens. But performance measured is performance gained. There has to be systems. There's got to be accountability. There's got to be structure. And Gilberto, there has to be consistency, right? It's the old expression my dad used to say, which I thought was the craziest thing in the world, but how do you eat an elephant? One bite at a time, right? When's the best time to plant a tree? 20 years ago. When's the next best time? Today, right? So it's not too late. And I'll tell you one thing that we'll leave as we close here. It is not hard to separate yourself from the pack. It is not even a Herculean effort, because I hate to say this because there's a lot of great people in our industry, but the competition is so bad at the things we just talked about.
Yeah.
Listen, I call every single client to this day on their birthday. I've gotten more business from that free 2-minute call than anything else I've ever done in my whole career. And I enjoy it. I've earned that right? It's not a solicitation. One of the challenges with too much drip marketing is eventually it's white noise. Eventually it's spam. Have real, genuine value propositions for people that have nothing to do with business. And I know that sounds however it may sound, but this is a fact. This is 30 years of me telling you this, and I have not changed my psychology. The way we deliver it, partnerships of working with people like you, other mediums that we use for communication. Sure, that's great. My last warning would be this: use technology and communication platforms as a tool, not a replacement. It is in addition to regular communication. And if you are not communicating with your clients regularly and your referral partners, they will forget about you and you will get replaced. Even if you have no updates, maybe it's just that touch point. Those things, and guess what? We're not good at that. By nature, in our industry, we think, well, I'll call and tell you when there's a problem. One of the videos we did last year was about turbulence, if you remember. It was about a flight, right? If you're a pilot, you've flown 5,000 times. If it's your first flight, the slightest little ripple in turbulence freaks you out. So why does a pilot tell you it's going to happen? So you don't freak out, right? It's really important with referral partnerships. We keep them posted. We let them know we're on it. We make ourselves available for their communication, and we keep them apprised of what's happening. And clients the same way. These are old school things, right? The things it takes are easy to do, but they're easy to have to do. And we got to get back to basics. This last analogy I'll give you, I can't even believe that this is still so apropos. Vince Lombardi every year at the beginning of football season would hold up a football and he'd say, gentlemen, this is a football. Now imagine saying that to pro football players that have been playing since Pee-wee at 5 years old. But he had to remind them that our goal is to take this ball and get it across that line more than the other team. And sometimes we've got to go back to basics. We get in this business, we get success, we develop all these systems and all these things and all this support, and we forget the basics that made us successful to begin with. And it all comes back to getting back to remember we're in the people business. And if you prioritize that and keep that as your focus, and you have great referral partnerships and support mechanisms like your company and a lot of others, it not only will you be successful, but you'll actually enjoy the business a lot more.
I love that. That's a great way to end off. And I'm glad that you were able to join us on, because I think not only just because of the experience, but what really stands out about you is like excellent communication, man. The way you're able to communicate and build relationships and all of that is like really impressive. So I think you're really the best person when it comes to not just the experience, like, you've been in the mortgage industry, financial space as well. Like when it comes to building relationships, we're really excellent at that. So I think the audience is going to learn like a lot just from everything that you've covered. So it helps them partner with CPAs, financial advisors and divorce attorneys. And I know now as a national sales director, I mean, you're helping your own guys as well. Like if someone, is watching this video here, and, I know in the mortgage industry, there's, people moving a lot right now with the current shift. Like if someone is interested in joining or potentially even seeing what Mortgage Choice Group has to offer, like where would they be able to reach out to you? Where can people contact?
Certainly they could go to our main site, which is of course choicemortgagegroup.com. But also, honestly, they could email me. I'd love to hear from them. I won't, the phone number probably wouldn't be appropriate here, but it's just Schaeffer, SCHAFFER at choicemortgage.com. And I think it's interesting, and I do want to acknowledge you. I think a lot of what you do doesn't really get noticed, and I think you are really ahead of the curve. You started launching what you were doing a few years back, and saw the importance of actually creating these connections with referral partners. And I really applaud you for that, because it was some good forward thinking on your part. As somebody somewhat new in the industry, I was impressed and I was intrigued. And it's one of the reasons I wanted to kind of align myself with you guys. So keep up the great work, man. It's really needed out there now more than ever. And like I said, we're looking to do a lot of great things in this next couple of years. I think this is a ripe opportunity. It's all a matter of how you look at it. Yes, things are difficult. We all know it. But I will tell you, there's going to be about 2/3 of the people in our industry that are going to shake out in the next 12 to 18 months. And the business that's going to drop off is not going to be proportionate to that loss. And there's going to be more business for everybody. And you'll actually be able to separate yourself from the pack even more than ever. So thank you again for everything you do. It's always a pleasure to be featured on your programs, and look forward to doing it again, hopefully sometime soon.
Likewise, I like the prediction at the end. Like it's kind of like the precursor for like the next interview in like 12 to 18 in the next.
I hope I'm not right about that one, but
yeah, good stuff. I always love these. I always learn something as well from having these conversations with you. So once again, really appreciate you, Richard.
Absolutely.